On behalf of the Board of Directors, Management and Staff of the Financial Services Regulatory Authority, it is my pleasure to welcome you to our symposium in recognition of the 10th anniversary of the FSRA. We are thrilled to have you here to celebrate this significant milestone, and we look forward to engaging with you throughout today's discussions. Today's theme, the path forward, mitigating risk, preparedness, and resilience, reflects our shared commitment to strengthening and securing the future of the financial services sector.
The Financial Services Regulatory Authority, FSRA, is pleased to present this documentary on the Symposium on the Financial Services Sector of St. Lucia, held on December 6, 2024, under the theme, Mitigating Risk, Preparedness and Resilience. This symposium represents a significant step by the FSRA in commemoration of the 10th anniversary of its establishment, while at the same time elevating its public image as a key institution in the financial landscape of St. Lucia. The objective of the symposium is to create greater public awareness of important developments and policy issues related to the financial services sector in St. Lucia, and to highlight the FSRA's celebration of its 10th anniversary milestone.
Attention Atilia, c'est pour faire public la comprendre plus meilleur ces différents sujets et développement qui est important en secteur services finance en Sainte-Lucie et pour célébrer l'occasion 10e anniversaire commission là qui règle service finance FSRA.
The symposium mainly took the form of 4 panel discussions on topics that are relevant to the financial services sector in St. Lucia.
Durant l'atelier, il y a eu 4 différents groupes qui ont discuté différents sujets qui connectent et puis services finance en Sainte-Lucie.
They are 1. Climate-related financial risks.
Risque financier qui ni relation et puis conditions temps.
2. The emergence of new technology in the financial services sector.
D. Technologie neuf qui a entré en secteur services finance.
3. The importance of credit unions in the economy.
3. Importance de l'union crédit, c'est à créer credit union en l'économie.
And 4. How anti-money laundering and combating the financing of terrorism compliance can be enhanced.
Et 4e, manière pour goumer contre l'argent sale qui pas légal et affaires terroristes et pas improuvé à sous-règle contre l'argent sale qui pas légal.
The panel discussions are coordinated by a moderator, and each panel mainly consists of stakeholders and experts from the various entities in the financial services sector in St. Lucia. They bring their own unique and practical perspectives to the topics of discussion. We now present an edited version of the key highlights of the symposium by the FSRA. We hope that the information presented will contribute to a better understanding of the financial services landscape in St. Lucia and the issues confronted by the sector.
Nous n'y espoir que information nous présenter car il de ou comprendre plus manière service finance en Sainte-Lucie et ces problèmes là qui a affecté secteur ça là.
We begin now with the address from the Prime Minister of St. Lucia, Honorable Philip J. Pear.
I welcome you all to the FSRA's first ever symposium on the theme, The Path Forward, Mitigating Risk, Preparedness and Resilience. 10 years is a significant milestone in the life of any institution, and this is even more significant given the rapid advancement in the global financial services sector and its impact on developing states. The FSRA remains steadfast in fulfilling its core mandates, ensuring the integrity of St. Lucia's financial services sector while providing effective supervision of registered entities operating within the jurisdiction.
The Prime Minister revealed that St. Lucia's economy is showing strong signs of rebounding, evidenced by robust growth in tourist arrivals, record low levels of unemployment, and continued expansion in the construction sector.
I'm happy that we are having these conversations at this critical juncture as the financial services industry globally is changing very rapidly, and we are not immune to these changes. While these advancements in technology offer new opportunities to both the providers and consumers of financial services, they could also pose significant risks if sufficient safeguards are not in place.
The Prime Minister also spoke of recent legislative changes that have been introduced to strengthen and modernize the financial regulatory architecture in St. Lucia, including the new Cooperative Societies Act No. 16 of 2024.
This symposium is a vital platform for discussing the challenges and opportunities that lie ahead and formulating effective strategies to strengthen our financial ecosystem. The government of St. Lucia reaffirms its commitment to legislation that will ensure that St. Lucia is compliant with international financial standards, and our financial services are protected for the benefit of the people of St. Lucia. A key objective of the symposium is to enlighten the general public on what these issues are and how they as consumers are likely to be impacted. We must never forget that these institutions and these services are for the people of the country. All the people of the country should benefit from these discussions. We cannot develop a dual society where only one part of the population benefits from growth or expansion. Anything we do, we understand fully that we operate in a global world, and St. Lucia cannot stand alone. But we must have our programs must never be ahead of the people of the country. So we must be patient, we must be unique, but we must understand that these organizations exist for people at some level of the society. Hence, if we are speaking about the setting up of bank accounts, it must not be a task where you have to find who is your mother, your grandfather, your aunt, or your cousin. It cannot be. It cannot be right. And regardless of what standards we have to deal with, that a young person coming from school cannot open a bank account because they don't have 2 or 3 forms of ID. And you must understand that this playing field is not level. A lot of what we are asked to do is not being done in the countries that asked us to do it. But we understand that we are small fish in a big pond, and it must be compliant, but we cannot fall down and die. And you, as the brightest and the best, must also understand that you have a responsibility to protect those who are not as fortunate as you, or those who do not have the opportunity to do what you did. So I want to say to you today, when you leave this forum, the people of the country should understand better why compliance and regulation is necessary, why we have to do certain things, why they must have a source of funds for the income that comes from abroad. But they must understand. But we must not make them believe that they are inefficient, or they are ignorant, or they do not know what happens. You must educate them. That is your role, to educate them. Because the final analysis, all of us have to live in this country. And even if we can protect ourselves, but the country will remain, and we have to make the country a better place for all of us. I thank you very much.
Diwatan ite ka délivrer plus gros l'adresse là en cérémonie pour commencer atelier discussion WEG Service Finance. Premier ministre Honorable Philippe J. Pierre mentionnait accomplissement autorité FSRA pour régler secteur finance là. Il parlait à sous ces difficultés qui changement global con avancement technologie, changement climat et puis nécessité pour résilience et préparation en système finance. Aussi, Premier ministre a renforcé l'importance loi qui neuf, qu'a chaîne publique là au courant et puis ça qui a fait et pousser plus collaboration pour faire assurer secteur finance là stabiliser et profiter.
The chairman of the FSRA, Mr. Philip Dalsu, will now briefly address the symposium with his welcome address highlighting the main topics for the panel discussions.
As the chairman of the Financial Services Regulatory Authority, or FSRA, as most of you know it, it is a privilege and indeed distinct honor to welcome you to this inaugural August Symposium in celebration of our 10th anniversary. Since our inception on January 1, 2014, the FSRA has served as a cornerstone of the regulatory framework, ensuring that our financial institutions operate with sound practices, transparency, and accountability. The first topic on our agenda is climate-related financial risks. Climate-related financial risks refer to the set of potential risks that may result from climate change and that could potentially impact the safety and soundness of individual financial institutions and have broader financial stability implications for the financial system. I would also like to recognize the crucial role of the insurance sector, both in the general and life insurance segments. Risk is the raison d'etre of the insurance industry, and risk assessment is already deeply embedded in organizations' risk management and underwriting processes. The emergence of new technologies is transforming the financial landscape at an unprecedented pace. Innovations such as blockchain, artificial intelligence, and fintech are reshaping how we conduct financial transactions, assess risks, and serve our customers. The fight against money laundering and the financing of terrorism remains a top priority. As financial crimes become increasingly sophisticated, we must strengthen our AML's CFT frameworks. This involves enhancing our compliance programs, leveraging technology for better detection and prevention, and fostering collaboration and information sharing among financial institutions, regulators, and law enforcement agencies. Finally, we turn our attention to financial inclusion, the credit union sector, and the need for regulation. Credit unions play a unique and increasingly vital role in our economy, particularly in rural and underserved communities. With a substantial asset base of EC $1.6 billion, they are instrumental in promoting financial inclusion and providing services to segments of the population that aren't usually serviced by commercial banks. We have seen a phenomenal increase in total membership from 75,653 in 2013 to 139,230 in 2023. These figures are inclusive of dual membership. However, their growth and stability necessitate robust regulatory measures. In conclusion, today's symposium is an opportunity for us to engage in meaningful dialogue, share knowledge, and develop strategies that will strengthen our financial sector.
Now, on to our panel discussion on climate-related financial risks. The disastrous impact that climate change could have on the economies of small island countries is well known. The panel on climate-related financial risks will discuss how financial institutions can mitigate the risks of climate change on their operations, bottom line, and their financial stability. The panel consists of 6 experts: Dr. Modibo K. Kamara, Chief Executive Officer, A2F Consulting; Mr. Samuel Auguste, Chief Administrative Officer Acting, President of the Bankers Association of St. Lucia. Mr. Shahid Kalicharan, Senior Fund Manager, BOSL Fund Management Company Limited. Mr. Leighton Khan, Executive Chairman, Agostini Insurance Brokers St. Lucia Limited. Mrs. Andrea St. Rose, President, Institute of Chartered Accountants of the Eastern Caribbean. And Mr. Shane Felicier, General Manager, St. Lucia Cooperative Credit Union League Limited.
So, Ms. Andrea St. Rose, what best practices exist for integrating climate risks in risk management frameworks, and how can institutions ensure these risks are adequately addressed?
So, in the first place, we are assuming that financial institutions do have a risk management framework in place. And the risk management framework really serves as a guide, so to speak, with respect to the manner in which the institution would go about identifying, assessing, monitoring, and managing risks. Implicit in this framework should be the requirement that emerging and new risks are addressed. And climate-related risk is one that we consider to be a new and emerging risk. So in the first place, as part of the annual review that takes place, this has to be addressed.
Dr. Karma, how can financial institutions implement climate change-related stress testing, scenario analysis to better understand potential impacts on their financial stability and resilience?
At the essence, the stress test is nothing else than just a structural methodology for you to kind of like predict how potential risk will impact you. I mean, we do that implicitly on a daily basis. If over time, due to sea level rise and so on, the business I'm doing today might not be viable in 10 years, right? And basically, what you also need to take that into account is say, okay, well, am I prepared for this adaptation? Am I prepared for this change in demands, in consumer needs, in the overall ecosystem that I'm participating to? So there's this longer-term perspective also, which has to be taken into consideration due to the nature of climate risk. Can I stop there? Thank you very much.
I have a question here for Mr. Agis. How can financial institutions leverage the transition to a low-carbon economy to identify new opportunities in green finance, and what role can they play in supporting sustainable investments?
We can play our part in transitioning to the carbon economy. By first, one of the things we could do is the issuance of green bonds, green investments. And essentially those would mean those bonds and investments that would lead to the betterment of the environment, of social needs, etc. In St. Lucia, we have a number of our financial institutions offering green products, offering loans at preferential interest rates up to 10 years, no deposit, that can be used to get your solar panels, to get your hybrid or electric vehicles.
I think I'll address that to Mr. Khan. How can financial institutions, regulators, and other stakeholders collaborate and share knowledge to better understand and manage climate financial risks, and what platforms or initiatives are most effective?
One of the first things I think they all need to do is to come together under one tent. The insurers, the regulators, the credit unions, all the finance houses. We all face this, what we call an existential threat. But insurance companies, on the other hand, are facing some real difficult challenges trying to secure those investments. And it's a real problem, and I'm not sure we've been talking enough about how it's impacting on the insurance industry. And we need to have a deeper conversation about that.
Yes, I think insurance is going to be a big topic because everybody here is impacted in one way or not by insurance. So, Mr. Kalicharan, how are climate risks affecting asset valuations and credit ratings, and what measures can financial institutions take to mitigate these impacts?
To mitigate those risks, there's a lot of different things that you can do. The big one is portfolio diversification. Diversify your portfolio. And I'm proud to say that now more than ever, we've seen great financial innovation in the OECS. So investors have a wide range of financial instruments that they can use to mitigate those risks by using diversification.
So we have Mr. Phyllis here. So my question to you is, what are the key challenges and benefits of improving disclosure and transparency related to climate risk financing, and how can institutions enhance their reporting practices?
So the challenges, especially to the credit union sector, is limited capacity and resources. You have evolving standards, and nobody's trained in order to actually implement it, understand it. I mean, I listened to Ms. Sandrose, and I'm glad to hear that the OECS and St. Lucia is taking the lead on doing this, because one of the problems and even the challenges is half of these standards are not related to our region. So you come with this homogenized standard, and then we don't have snow. We don't suffer from tsunami, but we have hurricanes every year. So, you know, if you have to have and this is going back to capacity building, you have to have your people in your institutions trained to understand the risks which actually affect this region. And therefore, the standards actually have to relate to the region.
The next panel will address the emergence of new technology in the financial services sector. New technology in the financial services sector has revolutionized traditional banking, payment systems, risk compliance management, and other aspects of the financial industry. We often hear of artificial intelligence, blockchain technology, cryptocurrency, and machine learning. The panelists are Mr. Martin Hanna, Chief Executive Officer, Penny Pinch, Inc., Mr. Delatulo Forster, Attorney at Law, Hodder Law, FinTech Pioneer, Mr. Luther Prosper, Manager of Information Security, Bank of St. Lucia Limited, Mr. Jerry George, President, Information and Communication Technology Association of St. Lucia, Mr. Kervin Tobias, Immediate Past President, Janu Credit Union, Mr. Nohan Pabu, Regional Head of Information Technology and Guyana Operations, Massey Finance Remittances.
The topic to be explored is the emergence of new technology in the financial services sector. Martin, what impact do you believe the emergence of fintech startups has had on traditional financial institutions?
I believe, 7 years ago, it was different. Customers could now onboard to a mobile money account in minutes, get an issued debit card, and begin transacting, as compared to days or sometimes weeks. So there's a forced decision being made by these institutions as to what are they going to do. Are they going to start building their own new products, or are they going to, take the decision to collaborate with companies like Penny Pinch?
Adela, I know this is right in your wheelhouse though. Can you share with us a bit about the adoption of blockchain technology?
Blockchain technology would decrease your risk. It can make payments seamless, happen in minutes or seconds, and it can just change the entire game. I think one of the reasons why we're kind of held back in the Caribbean is because we do things very slowly. And again, the R word, risk. We are afraid to take the moves because of, the CFATF, because of the VATF, and keep going up the chain. There's always something on top of our heads making us afraid. I also want to talk about collaboration. Collaboration is extremely important because it doesn't happen when you have a bunch of technologists on one side and a bunch of, bankers and insurance people on another side, and there's no conversation, there's no commonality. So essentially, one is speaking French, the other one is speaking Creole. And they kind of understand what's going on, but they're not flowing really with the conversation. But the collaborations have to understand, and the institutions need to understand the risk matrix in order to integrate the technology into their day-to-day affairs.
At this stage, I think it may be beneficial to spend a little time discussing how technology, and specifically artificial intelligence, AI, and machine learning are transforming risk assessment, there I said it, Adela, we're safe, risk assessment, fraud detection, and customer service in the financial industry.
AI is really nothing new. AI is just the newest implementation or representation of what computers have been doing, scientists have been doing, data analysts have been doing since the beginning of time, essentially. So impacts to the financial industry. I would say that those impacts are primarily internal, as internal to the banking sector, and that looks at processes, operations, product delivery and customer service, and risk, of course. And external, where it touches on the industry, competitiveness, service delivery, service and product integration, regulation and monitoring.
In terms of opportunities, and I'll just go straight into the opportunities. Enhance customer insights. Improve efficiencies. We could see that one. Proactive engagement with members, credit unions, with customers. And keyword, proactive.
How do we now leverage all of this data to personalize the services that our financial institutions provide to our customers? Noran, I know that you're well versed in this area.
What customers want from a financial service. They want to work, they want to have access to the service anywhere, anytime. They prefer now, instead of walking into a location and trying to figure out if they could get through the service, that they can access it anywhere, anytime, maybe in a mobile device, on a computer. The next area is the speed and efficiency.
Luther, as an information security expert, what are the latest cybersecurity challenges posed by new technologies?
When you look at the statistics, 40% of businesses globally are exposed to some sort of cyber attack. So what that means is 4 out of 10 people, or 4 out of 10 of the persons in this room would have some experience in some way as it relates to a cyber attack. And furthermore, 60% of businesses that have a serious cyber attack go out of business within the first 6 months.
Next is a discussion on the importance of credit unions to the economy. Credit unions play a vital role in St. Lucia's economy with membership of more than 100,000 island-wide. Our panel will dive deeper into details of how precisely credit unions help develop our economy and benefit its members. The panel consists of Mr. Lucius Elevic, General Manager, Library Cooperative Credit Union Limited; Mr. Egbert Stevens, former Registrar, Cooperatives and Friendly Societies, St. Lucia; Ms. Priscilla Charles, Sales Manager and Principal Representative of CUNA Caribbean Insurance OECS Limited; Mr. McCorville Combi, former President, St. Lucia Teachers Credit Cooperative; and Dr. Thomas Samuel, Economist, former Director of International Trade, Ministry of Commerce, Manufacturing, Business Development, Cooperatives, and Consumer Affairs.
Our first panelist will address the following question. How do credit unions impact the St. Lucia economy? Dr. Samuels.
Thank you very much, Mr. Moderator. The membership of the credit union movement in St. Lucia is estimated at 139,230, which means that there's such a level of penetration and participation of the public, so it's something that we are all very familiar and part of the financial DNA, so to speak. Over the period 2014 to 2023, the level of value added from financial intermediation activities from our unions climbed from a value of 286.5 million in 2014 to about 305.2 in 2023. As you would appreciate, year on year, this amount fluctuates, but on average, it has been trending upwards at about a rate of 6.5% annually. So it is quite a significant indicator of the impact and contribution of credit unions in St. Lucia.
Mr. Stevens, 2 questions. Are credit unions currently regulated? And secondly, how does one become a committee member or director of a credit union?
Credit unions are regulated, yes. I mean, from the inception when the cooperative laws were introduced in St. Lucia in 1950s, credit union being a cooperative, they have been regulated from the inception and they continue to be regulated.
How does one become a director? How does one become a member of the credit committee, the supervisory committee?
The election process in a cooperative is statute indicated. The statutes, the bylaws indicates how you're going to become a committee member. The members would make the decision as to who they'd like to represent them on the different committees.
Ms. Giles, recent statistics from the National League indicate that 16 credit unions with an asset base of 1.64 billion EC dollars, owned by over 130,000 members, constitute the St. Lucia movement. What would you say are the benefits or the advantages that make credit unions so attractive in recent times?
So if you have an account with the credit union, there are no fees charged monthly like what we may have to face banking with other financial institutions. In terms of the loan fees are at a minimal. I did some research and I found out that loan fees can range from $10. Can you imagine paying $10 for a loan? And it could go up to $1,000. Some credit unions would actually charge a flat fee, and others would charge based on tranches. So if your loan is between X and Y value, you would be charged a certain amount. There were some exceptions, though. I came across a credit union that charged absolutely no processing or admin fees for loans. We all know that credit unions are very much involved in community outreach programs. They provide sponsorship for sporting events and other cultural activities. In terms of the ownership structure, I think we touched on that. So you're automatically a shareholder of the credit union. So you don't have to go anywhere else to buy shares. You don't need any broker. You join the credit union, you are automatically a shareholder. There is also a patronage refund that is paid to you, and that is a refund of interest that you would have paid on your loans.
Mr. Combi, the question now is about interest rates. How will you respond to the comment from some members that the price of credit union loans can be equal to or even higher than a bank loan?
The response is, yes, it may be so. That is the reality. But in many instances, particularly in categories of loans, personal loans and so forth, the credit unions give competitive rates and even lower rates. One of the things that my credit union, we started telling our members is, listen, when you go to the bank and they tell you all the benefits or the interest or the non-banks or whatever, and they tell you, you ask the simple question, how much money I have to pay per month and for how long? And then you come to the credit union, you ask the same question after we have told you how much you're going to cost, and that way you have a clear picture of what is the interest the bank is charging you, what is the interest the credit union is charging you.
The second question is there a viable future for smaller credit unions?
Credit unions with less than 5,000 members, less than $50 million, whether they can survive, have a viable future, the answer is yes. Because history has taught us that small players can survive as long as they identify their niche and they make the necessary adjustments to the changing environment.
Mr. Elevic, what is a model credit union?
Not every credit union in St. Lucia is on the pathway to becoming a model credit union. So on that basis, we need to rationalize. We need to look at what is actually happening. And the main reason why a number of credit unions are not on the pathway to become model credit unions is because of the inadequacy of leadership. And so 16 credit unions in St. Lucia, the time has come where we really need to look at it critically. And I am saying that, yes, the question of rationalizing and restructuring the movement is important. Presently, my last point is, presently, credit unions in St. Lucia have what I call systemic presence. We are there. But we are yet on the pathway to influence what goes on in that oligopolistic market in which we operate. The banks are still powerful. The banks are still decaling us. So yes, so then we are saying that our mandate is to achieve economic justice, distributive justice in that system. We must be able to influence what goes on in the marketplace. 16 credit unions as presently constructed, no. We need to do something about that.
And now to a panel discussion on how anti-money laundering and combating the financing of terrorism, AML-CFT compliance can be enhanced. As our panel of experts will explain, this involves a wide range of measures, including strengthening our legislation, enhancing technological applications, better training and education on this topic. The panelists include Ms. Ayana Caesar, Senior Manager of Risk Management and Compliance, Bank of St. Lucia Limited. Ms. Albina Duplessis Meda, Compliance Specialist, St. Lucia Workers Credit Union. Mrs. Andrea St. Rose, President, Institute of Chartered Accountants of the Eastern Caribbean. Mrs. Antonia Schalmine, Senior Crown Counsel, Attorney General's Chambers.
Ms. Albina Duplessis, with experience in the credit union, a vast level of experience. The first question goes to you. What can financial institutions do to better protect themselves and their customers from AML, CFT risk, and how do change in laws impact these efforts?
Let's all agree that financial institutions face significant risks in money laundering and TF. Now, this risk is even more heightened in the credit union movement simply because we are highly, highly cash-based. There are several steps that we could take to protect our customers and members from money laundering risk, several. But I'm going to summarize them into two key steps in the interest of time. The very first one is that we must conduct a comprehensive money laundering risk assessment. That's the first thing. Now, during that exercise, it is where we identify all risks associated with money laundering, TF and PF. Once we've done that, then we must assess those risks across our member types, across geographies, across product types, across our delivery channels. Say 80% of our member base access our products through the internet or online banking, mobile banking. This brings me to the second part. You mentioned how do change in laws impact efforts to combat ML, TF, and PF. It is financially burdensome on us credit unions because we are now faced with compliance costs. We are now faced with increased regulatory costs. In the new act, now credit unions are now to pay annual license fees. So I don't know where we're going to get that money from. After having to pay the league, some of us have to pay the league, so now we have to pay you too. So it is really, really burdensome on us smaller credit unions, but we must realize that it is important, despite the challenges, those new laws have to be passed to keep us aligned with best practices and other international regulatory bodies.
And that's where I now segue into Ms. Caesar, who represents the banks.
Particular for our bank, what we do not have the luxury is that we don't only have to understand our risk, but because we are the banks for all other sectors, so insurance, credit unions, etc., we also have to understand the exposure. So we have to read the whole book, right? We have to know everything. So that's really where it stems from us. We focus on the Financial Action Task Force standards, any national risk assessment that the country presented on money laundering risk exposure for the island, for the sectors, etc., any sectoral documents that were produced, and also in the conduct of our assessment, we look at our customer base, the type of customers we have on our books, to get an idea as to whether particular areas of risk are. Traditionally, cash-intensive products or services, they tend to be weighted higher in risk. And of course, therefore, you would require more robust monitoring for that aspect.
Let's hear from a finance professional, Ms. St. Rose. Similar question, how should financial institutions determine which activities are more likely to involve AML, CFT risk, and what steps should they take to reduce these risks?
It all starts with onboarding of your customers. And you need to establish special parameters for risk rating those customers that you have. Now, when you speak of the sectors, the activities that are more likely, that are prone to risk, in the legislation itself, there's a section in there that lists in Schedule 2 a number of activities that should be considered. And like you indicated earlier, real estate business, car dealership, casinos, courier services, jewelry business, internet gaming, attorney at law. Now, when it comes to CFT, consideration should be given to the churches. Sometimes we figure churches, we go, we pray, and we all holy. But churches are avenues that could be used for laundering activities because of the fact that, they deal with cash. It's cash going. You had to give the church checks, right? Or wire transfers. It's cash. They deal with a lot of cash. So also not-for-profit charitable organizations are institutions that you need to look at when you do your own onboarding at the bank.
What I will ask our person who now represents the legal side, what recent changes in laws around AML CFT should financial institutions and the general public be aware of?
Ms. St. Rose just touched on the not-for-profit sector. And coming soon is the Non-Governmental Organization Act. So some big changes are going to be coming there. It has not been passed as yet, but it is going to be passed soon. And I suppose it would also be important for the layman or the man on the street to understand why they're being asked to provide their shoe size and their grandmother's last name to open a bank account, because those are one of the complaints. Oh, they're asking me for this, they're asking me for that. So I think we really do require some type of public education continuously so that we get the public buy-in as to why all these procedures and protocols are required.
Thank you to all my panelists, esteemed panelists. I think we've ended at a very good point, and thank you, audience.
Différents monde qui bien étonné en affaires services finance sorti Saint-Lucie avec l'autre pays t'est engagé en discussion à sous plusieurs sujets comme finance concernés riche changement climat, technologie neuve en services finance, importance d'union crédit pour l'économie et renforcer règles en management risk finance international. Plus gros commission qui sorti en ces discussions, c'est nécessaire pour plus collaboration entre ces différentes agences en secteur services finance pour protéger l'accomplissement qui j'ai fait pour improver les affaires business.
So on behalf of the Financial Services Regulatory Authority, FSRA, I extend our heartfelt gratitude to all who contributed to making today's symposium under the theme, The Path Forward, Mitigating Risk, Preparedness, and Resilience, a resounding success. As we celebrate the 10th anniversary of the FSRA, this event marks a significant milestone in our ongoing commitment to enhancing the financial services industry. Thank you for being part of this journey and for your continued support in advancing our shared goals.
The Executive Director of the FSRA expresses deep appreciation to all those who have contributed to making the symposium a success and thanks you for your presence and engagement. As we look ahead, we hope that this symposium serves as a meaningful platform for dialogue and collaboration in strengthening St. Lucia's financial services sector.